Okay, welcome back to the Fail Breakdown channel, everyone. Today is Friday, December 5th, and we're going to be looking at a very clean fail breakdown of the 68-61 level that happened in the pre-market. Perfect trade for a Friday, one and done before the open. Sit back and do nothing for the rest of the day. Go and enjoy your weekend with some profits in the bank and mental capital nicely topped up. As ever, I'm going to be following the methodology taught by Adam through his Substack. His methodology is posted to his website here. Go and check it out and subscribe to him on X for more detailed commentary throughout the day. Very, very valuable. Okay, let's get into the charts. Okay, so here we are on the 30-minute chart. We're looking at the action for the entirety of the week, and we've really been trading inside this upward sloping channel that was defined early on Monday and Tuesday. So if we take the highs from Monday and Tuesday, and then the two lows, well, the overnight low Sunday, pre-market low Monday, and then overnight low into Tuesday, that kind of defined the channel that's contained all of the price action for the entirety of the week. And coming into today, I've got it paused here right at 8:30. So coming in today, we've got an active fail breakdown from yesterday of the 68.47 level, those two lows we set in the morning, 68.45. So that is still active. We've got our runners still holding those coming in today, and in the evening and overnight session, we've just kind of ground up and then been flagging sideways. So really very similar and a deja vu from both Wednesday here, where we closed near the high and just flag sideways in the evening session, and then open up near the high, and then same thing really on from Tuesday as well. And what did we do on Tuesday and Wednesday? Well, we did nothing except wait for the flush. Flush happened right around the pre-market or just after the open on both Wednesday and Thursday, and we're going to do the exact same thing today. So nothing dramatic, nothing fancy. Like Adam says, trading when it's done well should be boring. So we're just waiting most of the time, and waiting to react when the setup occurs. So let's flick over to the chart I used for replay and get into the action. Okay, so here we are. It's 8:15 Central Time at this point. As I just mentioned, we've run up overnight and then we've just been kind of chopping sideways through the London session. So nothing to do except set up. We've got our plan from last night. 68.60 was going to be a major level reclaim, the first major support down that we can look to trade a flush and a reclaim of. But what's happened in the evening session is prices dipped and set a nice clean low for us to trade off right here at 68.61. So right in line with Adam's first major level down. So the plan is set, but at this point it's really transitioned from a level reclaim that takes a bit more finesse to just a more of a traditional fail breakdown. So nothing to do. We still got a runner from yesterday. Just sit and set your alerts. Set your alert for maybe 68.64 and wait back, sit back and do nothing. It's also good to kind of switch off during those times. You don't want to be just staring at the screen constantly when you don't need to be. Save that energy for when those alerts trigger and when you need to be on high alert and higher sort of level of attention. So let me bump the speed up a little bit. Let's do 10 times. Let me go a bit faster, 20 times, because I don't think it triggers for half an hour or so. Maybe even faster still. So this is coming up to 8:30, an hour before the open. Okay, and right here we're starting to get a move 10 points down. If you are looking at the chart here, that's kind of first moment, so sort of should prick your ears up a little bit. Alerts should be triggering at this point, and we start to pay a bit more attention here. The nice thing, I suppose, about this, usually first down, it's not the highest quality because it's pretty close to where price hasn't dipped very far. But in this case, we've run up a bit overnight, so we're getting kind of a 25-point dip into this level, which improves the quality a little bit. The deeper the flush, had it only been a 10-point flush, it's a bit less appealing. So let's crank the speed down a little bit now. It's about 10 minutes before it's going to trigger. So we've got the flush. So now we're kind of switching modes into stalking mode. Is the trade going to set up or not? It's always worth at this point. You can draw, we don't know how it's going to develop, but you can draw the 5-point danger zone just to have it there in case we don't get either type of acceptance. And that's actually what's going to occur in this trade. And I think in the trade plan, Adam had noted if we test down to 56 and then recover 60, that would be something he'd be interested in. So we know that Adam's certainly going to be stalking this trade, which is a good sign. Every time you're taking the same trade as Adam, your chances of success are going to be very high. So now we've set the low almost exactly as Adam put in the plan, right down here at 56.75. So we know that. Let's just assume we're going to be entering in above the danger zone, maybe 66. We're going to be looking at least a 10-point stop. So you can adjust your position size accordingly based on your risk parameters. So we've flushed the low and we've bounced. It was a good scary flush in a pretty rapid rate of descent, especially for the pre-market. And so now we're on kind of high alert. We haven't really had any form of acceptance. We've just bounced. And, it's a shallow flush, still in that shallow flush category, less than 11 points below the low. So we weren't expecting the type 1 acceptance, but we're now looking to see if we get type 2 acceptance. We've reclaimed the level, poked through. Are we going to dip? And there's kind of a little, whisper of it there. But you really be looking for it to dip back to the level in a quite pronounced way. And I think you often get kind of little elements of each of the three types of acceptance, or at least each of the first two types of acceptance, regardless of what you end up taking. So we turn the speed right down to 1 times here. So now we've been holding above. I didn't really note actually what time we got to 5 points above the danger zone, but I think it's right around 8 o'clock. So now we're just looking for it to hold a couple of points above the danger zone here. Hold for a couple of minutes above the danger zone to trigger an entry. But yeah, I was saying you often get kind of little elements of each type of acceptance, especially when you're trading the non-acceptance protocol. But you just have to go with like what's the predominant type. And we didn't kind of saw like a whisper of type 2 acceptance, but it wasn't. I wouldn't say it was the predominant type in this case. So here we've been above the danger zone for a couple of minutes, and so right now you've got a trade window. An open trade window, and you've got a valid entry from this point forward. So we can take an entry here, kind of around 86-ish. The one slight thing I didn't like about this trade was after we got to the top of the danger zone and held there for a couple of minutes, it did the volatility slowed down quite a bit, but so that was a potential invalidation. But for this time of day, that's not it's not abnormal. But I mean, you can kind of see it on the tape speed here. These are very low numbers, so not a lot of volume coming across the tape. So that's, lack of volatility is one of the big ones. And when you're thinking about invalidations, I suppose the best way to think about them, at least for me, is can I make a strong antithesis case? So, one point on its own is probably not going to be enough to invalidate a trade. So here, I think the slight lack of volume and volatility was the one turn off, but that on its own is not enough to prevent you from taking an entry. It's can you build up multiple factors that create a valid antithesis case. I think that was probably my mistake in the loss I took yesterday morning, or maybe a number of invalidations that each on their own weren't that significant, but when you stack 4 or 5 or 6 of them up together, then you have a bit more of a compelling antithesis case, and you can perhaps use that to prevent yourself from taking a lower probability trade. So yeah, fairly straightforward really, this one. Just follow Adam's methodology. There was no significant acceptance of type 1 or type 2, so we just wait for it to hold a couple of minutes above the 5-point danger zone, take an entry. It didn't move that quickly, but it did run very nicely, and we got a couple of trims before market open, and then it was plain sailing from there up to 6,900. I think we hit in the end. So perfect trade for a Friday, one and done. Anyone taking a trade after this, you'd be mad, if you're following Adam's methodology at least, especially for a Friday. Sit back, save that mental capital, and go and enjoy the weekend. Okay, thanks everyone. Catch you in the next one. Bye.